Hello trader, in this video we're going to talk about how Sandra made $1,397. This is not a real money account yet. She's a beginner and it's her first, I think, 4 or 5 months. She's now training so far, how to trade, and then she's going now into the first real money experience. So first of all, I would like to show you, and I think this is very important, that we always adjust $100 in the equation and we want to make $500 in average. And how we do this is always day trading futures. That means we have a specific time frame. She's, for example, from Germany. From US it would be 9 a.m. to around like 4 p.m. searching anywhere 1 or 2 hours, having the 1 minute chart because we have 60 candles within 1 hour. And I'm going to explain to you also how she made the trade, how she reads the market, and there's a procedure that I hope that will help you as a beginner or even as an intermediate trader, because we have so far very good results with students. So first of all, you see here that the trader is assuming the market is going up from orange line 1 to orange line 2. This is the time frame where the trader is trading. And then after the market is finished, first on understanding, was the market really going up or not? And you can see clearly the market was going up, like it didn't move what Sandra thought. And then afterwards, the market was going down. Now, the thing is always when Sandra is assuming the market is going up, where can she adjust $100 on average to make $500? This is always a very, very important thing. You see here a lot of green candles, totally acceptable. And then we always concentrate on color switches. That means red and green candles and red and green candles, as you see here. And then she traded here the color switch. She had a stop placement that was sadly that was too tight, I think. I think the stop needed to be here. And because of that, she knew exactly the 1 to 5 was not possible to do. We always are able to adjust $100 by having our entry once the green candle is closing and our stop placement on the green candle. And then we adjust this with so many buys as possible. We buy in a lot so that we have just $100 of loss when the price comes here. And then we go out with the stop placement. If the market goes above than here, this would be $100, this would be $200, this would be $300, like up to $500 would be somewhere very up high. And I think I'm very sure she wouldn't take the trade when having the stop here because she tried to squeeze it in very brutally. Market was going down with a lot of red candles. She was buying again, lost here another 100, so she had $200 loss for the day. And then finally, she saw here a trade where she was able to adjust $100 and to make 500, but she was out of ammunition. That means out of money. We always are allowed only to lose $200. Here the next day, you can see here how she made a trade. That means she assumed the market was going up. Then the market here, for example, in the time frame was also going up. And here you can see how she was taking one of these color switches, adjusted $100 in the equation and make $500. That's just something what's very important. Let's just go back to the Excel sheet to show you how it looks here. She needs still to learn a bit like how to fill this one out correctly, but actually it looks very good here. Here it says like how she lost $100 here in the equation, here minus 100, for example. And then within another trade, she made 722. With another trade, she made $500, as you can see here, right? And the thing is just that it is always very important to have always the same trading signal. There are always, this is a 2-step procedure. The first one is, as I just was showing you, is to understand in what direction is the market going at. Like, for example, when trading futures from here to there, this is maybe like a $900 move. From here to there, this is like a $1,000 or $1,400, $1,500 move. From here to there, this might be like also like a $900 move or $1,000 move. So around this is $1,000, this is $1,000. So inside there, because we use the 1 minute chart, because we have small candles, we concentrate always on red and green candles on color switches. So you have 1, 2, 3 color switches, as you see here. Even here a 4th one, even here a 5th one. And the thing is now, which of these color switches are so tight that when buying a lot and adjusting $100 in the equation, that it makes sense that if the market did a move from here to there, within, for example, this is 1630 to 1645 her time. So that means that was 15 minutes. If the market did this length from down here to up here within 15 minutes, if the market would do the same length again within 15 minutes, if you just look exactly, the market did within 15 minutes exactly the same length. Then the thing is, where can we see a tiny green candle to adjust $100 and make $500 on the way? And this is what exactly Sandra did for this trade here. And then afterwards, what happened again, and this is, I hope you can learn something out of this, because here we have a lot of green candles. Sandra is trading up. Within 15 minutes, the market was doing this move here, an average for the second time. And now check this out. Now there are a lot of red candles popping in. And we always say if there are a lot of green candles, I think it's good to trade up. But if there are a lot of red candles, then yeah, then it's very dangerous to trade down. We needed to wait here until we have a lot of green candles again. That means maybe when I would have understood if she traded here after the second green candle, but that's way too dangerous. You can see how the market structures down, because the market will always aim for bigger structure highs, as you see here, this green line here on the top. But we must really say, if we have here, maybe here a $1,000 move, and there's a color switch when adjusting $100, it's not just to aim here for the $900 move, it's to exit at $500, because in the end, it's the math equation. We have traders that had like 18 losing trades, they lost $1,800 within a month, but they had 8 winning trades and made $4,000, $5,000, that is $2,000, $3,000 in the equation. And this is just something very important to understand, that when adjusting $100, it's just like, where can I adjust $100 as safe as possible or realistic as possible with quantity, with some quality over the days and weeks, because some weeks are good, some weeks are not that good. And then just like exiting at $500. And the market is always running for bigger structure highs, bigger structure lows, as you see here on the left side. Or for example, because the market is here having a lot of green candles and now pops back, this pressure is still active up. We use consolidation phases on the left side, such as here. We use consolidation phases or contraction phases, such as here. And it's the main reason that the market is not reaching this here. The market is more like reaching this low, or just like, because here is a consolidation phase, you draw this into the right side, that this is our take profit zone when trading down, for example, to this area. This is just something what's very important to understand. So the one thing is like highs and lows are like magnets in these consolidation phases. But it's actually just to understand the market is pushing in these directions, and then just using a 1 minute chart, where can I adjust $100 to make $500 an average? Sometimes it is normal to lose, as you can see here. But what we can see is that these losing trades, as you saw here, and for example, here from Sandra, for example, here was occurring because here we didn't have enough space, because the market did this move from here to here, did it from here to here already. That means this is over exceeded with the push. And here you have a lot of red candles, and then Sandra is trying to buy here, for example. And this is just something what's very important. More red candles means the market is going down. That makes this signal here very good here, what she analyzed, or here. And more green candles means for us the market goes up, but makes this analysis very well. Hope you could take something out of this video. I love good trades. JT out.